So this caught me a little bit by surprise this morning. Uh, as everyone knows, I've been expecting a bottom in the dollar and an intermediate degree rally. Um, and even if it's just a bear market rally, I think it should last at least 4 to 8 weeks. But usually the bloodbath phase, the final capitulation phase of an intermediate cycle will last. Normally it lasts 5 to 7 days, sometimes a little longer. So this has only gone 3 days here. So I wasn't really expecting the reversal early this week. I was expecting it more maybe towards the end of the week or even the beginning of next week. But as of today anyway, this has the look of probably being the bottom, and it looks like the bottom occurred as an undercut below the election night low. So we get a little push below there for a couple days and then a reversal. So that looks like an intermediate bottom has formed to me. And another thing that makes me think this probably is a bottom is this reaction in gold right here. You can see a violent break below the 200-day moving average on that basically one-day rally in the dollar. And I've been expecting this to happen. As everybody knows, I keep telling people that we haven't had a true intermediate cycle low yet. We haven't completed a failed daily cycle. We haven't created the kind of sentiment that is typically seen at intermediate cycle bottoms yet. So I've been beating the drum that gold still has an intermediate degree correction ahead of it, and the multiple tags of the 200-day moving average was not really a good sign. You would, if the market was ready to really move higher, you would think it would come down, tag it, and then take off, and it didn't do that. It tagged it a couple times, and then we also saw that attack last Monday. Another warning sign that the banksters were keeping the gold market contained until the dollar did find its bottom. I think all the warning signs are there. So now what we're going to see happen, I've gone over this before. During the initial phase of an intermediate decline, traders are in denial. Usually, and in this case, this applies, the preceding rally has either gone far enough or it has lasted long enough to the point where it converts traders to a very stubborn bull market bias. So you can see here we've rallied for about almost 6 months in the gold market, and that even though we didn't really go up all that far, we just went from 1130 to roughly 1300, so 170 points. The magnitude of the rally wasn't that great, but the duration was. 6 months was long enough to turn pretty much almost everybody bullish. And so traders get stuck in that bullish mentality, and they can't see any scenario in which gold can move down. The exact opposite of what we saw in December. The market moved down, and in this case it moved down very sharply and very aggressively, and that created a bearish bias that was very, very tough to break. And so at this point traders couldn't envision any scenario at all that gold could possibly turn and go higher. And then after a 6-month rally, now traders are on the other side of the fence. They can't envision any scenario in which gold can move lower. And so what we're going to see is we're going to see traders try to pick the bottom over and over and over as gold moves down in this intermediate cycle. we're already seeing it. We're going to see traders double down on their long positions. Traders are still afraid of missing a rally, and that's not the kind of sentiment you see at an intermediate bottom. Nobody is afraid of missing a rally at an intermediate bottom. They're afraid that price will just keep going down indefinitely. So down here at the bottom, nobody was worried about missing this rally. Everybody was convinced that gold was going below 1,000. At this top, people are they're worried that they might miss the rally. So they're buying on every down day. They're doubling down, and even though all the warning signs are there, and this is a big one today. This bullish mentality has been engraved to the point where it's going to be tough to break. So the longer it takes to break that bullish mentality, the longer this intermediate decline is going to last. So the bottom will come when we no longer see anybody doubling down on their long positions. There will be no bullish comments on the blog. The sentiment will switch, and we'll start to see this kind of sentiment again. I suspect that at some point here we're going to start to see traders calling for $1,000 gold again, and that's the point at which we're getting close to an intermediate bottom. Now let's look at the dollar chart again. So this is a pretty good indication here. The dollar topped in December, gold bottomed in December. The dollar has been moving down into this intermediate cycle low for a little over 6 months. Gold has been rallying for almost 6 months. Now, I think we have a bottom in the dollar, and so it stands to reason that gold is probably going to move inversely to the dollar. Now, it won't do it every day, and it won't do it every week, but generally, if the dollar is going up, gold is probably going to be heading generally lower. Same here, as the dollar was heading generally down, gold was heading more or less up. And so in order to confirm this as an intermediate cycle low, the dollar has to rally far enough to break this intermediate trend line, and usually it's broken convincingly. So I'm going to say over the next month or 2 months, we're going to break this, and we're probably going to go up, and somewhere between maybe 100 and 102 on the dollar. Now, I'm still of the opinion that this was probably a bull market top, and that this rally is going to be a counter trend rally. So my view right now anyway is that this rally won't last more than 6 to 8 weeks. So we're probably looking at a top, I'm going to guess, middle of August to the beginning of September. And so it stands to reason that gold is probably not going to bottom until August or September. Now, there is one other scenario where gold could bottom possibly a little ahead of the dollar. If the dollar hasn't topped yet, gold could bottom if sentiment becomes too bearish. If sentiment just gets so pessimistic that we just run out of sellers, then gold could bottom before the dollar tops. So that's one thing that I will watch going forward, is the sentiment levels in gold as we move down into this intermediate cycle low, and that could short circuit the gold following the dollar completely until it tops. It's possible the gold could bottom a bit early if sentiment becomes extreme. But as of right now, I think we've got at least a bare minimum 4 to 8 week rally in the dollar, and that's probably going to result in a 4 to 8 more weeks before gold finds its intermediate bottom.